Today, I'm going to show you the 4 sites I use to figure out if a stock like Nvidia is overvalued or undervalued. The site I use is Simply Wall Street. Now, I use it for 2 things. First, their valuation, which shows 6 valuation points, and normally you want to see anything above a 5 out of 6 or higher, but I also use it for their DCF model. This shows that Nvidia is around 10.5% undervalued. Now, another source I use is stock analysis, which helps show some ratios that I want to see, like P/E ratio, forward P/E ratio, and price to book. These P/E ratios are just how much money the company makes. The price of the stock divided by how much money the company makes. Normally, you want to see around 16 to 18. However, since Nvidia is a really big company, and they're very popular, obviously, a P/E ratio on 30 implies that it's slightly overvalued, but in the same way, it's not as overvalued as people think. The P/B ratio is price to book, and it just measures the share price relative to the company's book value. Now, the third source I use is TradingView, and it shows me the earnings, predicted earnings as well, dividends, and I also use it to find what analysts forecast. Analysts see Nvidia going as high as $743 a share, and they have a price target around $313, and they're calling it a strong buy. And the fourth and final source I use is Finviz. It's kind of similar to TradingView, in which it shows a lot of these ratios that I want to see, but it also makes it a lot easier since it highlights what's good and bad. Obviously, if it's highlighted in green, it's good, so it's saying the P/E ratio, the forward P/E ratio is good, and if it's in red, it's bad. It's like this price to book ratio is really bad. If it's in white, it means it's somewhat normal, it's okay. They just can't tell if it's good or bad. Now, when you combine all that information together, it allows me to see if researching Nvidia a lot more is worth the time or not worth the time.